Tesla is scheduled to report quarterly financial results after the markets close on January 29th, 2025, which has investors asking if they should buy Tesla stock before the company announces earnings. I'm going to answer that question in this video, as well as preview other big picture items investors should look out for from Tesla in its upcoming earnings release. So let's get right into the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its latest quarter, Tesla's total revenues increased by 8% to $25.2 billion, and the operating margin jumped impressively by 323 basis points to 10.8%. The operating margin in the same quarter the prior year was just 7.6%. And I was impressed how the company was able to increase profit margins despite the fact that they have been lowering prices on basically all of their models several times, right? They've offered lower prices, they've offered financing incentives, they've offered discounts on charging, discounts on full supervised driving, etc., etc. And yet the margins increased despite that fact. That goes to show how good the company is at learning its operations and getting better and better at producing these vehicles at lower cost. Free cash flow also jumped to $2.7 billion, up from $848 million in the same quarter last year. So one thing we already know about Tesla's fourth quarter is how many models they produced and delivered. So in the latest quarter, they delivered 495,570 vehicles, and they produced 459,445. So you could see more deliveries than production. That means inventories likely decreased in the quarter as the company's rightfully adjusting to the lower than expected demand for electric vehicles, rising competition, and they don't want to offer too many discounts. And if they produced more, they would have to offer more and more discounts to sell these models. In the latest developments, their newest model, the Cybertruck, was announced that they were offering discounts across the board on Cybertruck models because those are building up in inventories and parking lots, and they don't want the inventories to rise too much. So that figure, 495,590, was much higher than the previous quarter in the third quarter of 2024. In the third quarter of 2024, they delivered 462,890. So they're going to report a roughly 30,000 unit increase of deliveries from the previous quarter. And if their margins were relatively the same as in the third quarter, then it's going to lead to a significant increase in operating income, profitability, and cash flow. If they were able to increase operating margin in the previous quarter at 463,000 deliveries, it's going to be much higher with 490 something thousand deliveries in the current quarter. All right, one of the bigger things that investors need to look out for from Tesla when they report these quarterly results is an update on the lower priced model. The company in the third quarter press release said that they have plans for new vehicles, including more affordable models, and that remains on track for production in the first half of 2025. So here we are in 2025, we're halfway through January, and when the company reports, it'll be towards the end of January. So they should have a pretty good idea if the more affordable model is still on track for the first half of 2025. If you've been following Tesla stock, I don't need to remind you about how many times the company has delayed production, gave you a promise of having some product or service at a certain point in time. And then when it came time to deliver on that promise, they told you to not pay attention to that anymore, to pay attention to something else, and delayed the product at some future point. Already this lower priced model, which was initially promised to be around $25,000, is going to be much more expensive. Excluding the tax credits, if there is still tax credits, right? The incoming administration is threatening to remove tax credits for electric vehicles. Without those tax credits, the rumors are that this new model will be at the $37,000 price point instead of the initially promised $25,000 price point. But it would still be an improvement from the current prices, which are over 40 in the mid 40,000 price point. So this will help, and it'll be a fresh new model, which always creates demand from consumers. Car sales are heavily dependent on new models. People don't just look at the performance of the car, how many miles per gallon it gets, or how much miles per charge it gets, and all of these things. A lot of people just look at the car, the way it looks. It's new, it's relatively lesser owned, not as many people have it. And so that facilitates demand for car sales, right? Cars can last 10, 15 years, but people usually only keep a car for maybe 4 to 6 years because they see a new model and they go in and they buy it. So that would be the primary driver of sales of this new model, is that because it'll be new, right? The price reduction is not going to be all that much, maybe 10, 15% lower than the current models available for Tesla. So that um, story that Tesla was telling investors 5, 6, 7, 8 years ago about having this lower priced model and it's going to facilitate millions and millions of new car sales, that's not going to happen, right? That's not going to happen. It's going to be around $37,000, it looks like, if the initial rumors are true, but it's still going to drive more sales for a company that's already expanding profit margins. It's already the best electric vehicle company in the world, and this will only help the company facilitate and further improve that lead. And of course, the other big thing is artificial intelligence and driverless car technology. Investors, although you're probably not going to get very much new information on their driverless car technology, you're probably going to hear more of the same promises of how they're on track for some future date, and those repeated statements. I don't expect anything concrete on driverless cars in the upcoming earnings release. However, I do expect something more concrete on the lower priced model in the upcoming earnings release. So should you buy Tesla stock before it announces these earnings? Well, it's trading at a forward price to earnings of 105. 105. This makes this stock about 5 times as expensive as the average stock in the S&P 500. It's about 3 or 4 times as expensive as tech peers, AI tech peers like Nvidia, Microsoft. It's 5 times more expensive than Alphabet. And so I've been saying this for a while. Tesla stock is very expensive. It's incorporating all of those excellent prospects. It's already incorporating that into the valuation. And so it's already trading, it's already selling at a price that assumes all of those things are going to happen for sure on the dates that Tesla's management team has said is going to happen. So if you believe Tesla's management team that they are going to deliver the lower priced model in the first half of 2025, they are going to deliver driverless robo taxis in 2026 or 2027, and it's going to be a huge hit. If you believe all of that, then maybe Tesla stock is right for you. But for everyone else, I don't think Tesla stock is a buy. In fact, I have Tesla stock rated as a sell. And so going into earnings, I would say, no, do not buy this stock. At the very least, if you're interested in Tesla stock, wait till the earnings come out, digest the new information, and then make a decision on Tesla stock.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.